Hello traders. This is the technical analysis of the market, looking at the Dow Jones, the NASDAQ, and the S&P 500 in order to understand where the market is about to go, what is likely to happen. This video is for educational purposes only. It's neither a solicitation nor an offer to buy or sell anything, and it's primarily for the TST WS008 traders. Okay, our website is www.stochastic-magdi.com. We are looking now at the S&P 500, the monthly chart of the S&P 500. We can see clearly, drawing our Fibonacci tools on this chart, that the price is in a region of 75% Fibonacci retracement level of the move to the downside, the movement from here to here. The price is now approaching the 75% Fibonacci retracement level for the S&P 500. Okay, the S&P 500 represents the market itself. So when you are swing trading, or when you are about to swing trade, you will check first the direction of the S&P 500. Okay, if the S&P 500 is going up, you are looking for candidate to buy, and when the S&P 500 is going down, you are looking for candidate to sell. And if the S&P 500 is going horizontal, you are looking for a consolidation candidate. Okay, very important when it comes to swing trading. Now, same thing when you are day trading, you want to trade in the direction also of the market, paying attention to the leaders of the market. The level for the 75%, because I draw on my Fibonacci tool 75%, then I have 76.4, then I have also 78%. Okay, the level for the 78% that many traders will use is 1387 for the S&P 500. 1387, that is 78% Fibonacci retracement level. You must pay attention to that level, 1387 for the S&P 500. The 76%, which usually the price will try to touch, is at 1374. 1374 for the 76% Fibonacci retracement level. And those who are using 75, the level is 1359. There is a high probability that the market may try to come in the zone of 1374 before coming down. Our strategy is that when the price is approaching a key levels, okay, a key support or resistance level, when the market, which is represented by the S&P 500, we will be day trading. We do not swing trade when the price is approaching a major level. Same thing we were telling traders before, when the price was in the region of 61.8, now the price break that level and went above it and found a support, and now it continues the movement to the upside. The next level to pay attention to is the 75%, which is 1359. Very important. But another thing you need to remember, that the smart money, when they see a signal to sell, they do not sell straight away. They ask the question, where is the best place to sell? This is the difference between the smart money and the retail traders. The retail traders will see the signal and they will just sell. They don't ask the second question, which is, where is the best place to sell? The smart money will always ask the second question, which is, where is the best place to sell? So, and also, you do not assume anything. You use the TST WS008 or the TST WS008 to participate in the direction of the trend. There is a high probability also that smart money always like to sell at the edge of the Bollinger Band. Okay, now on this chart I place the Bollinger Band 32 volatility 2 on this chart, or you can use 30 or 50. I have a reason, because I use a different Bollinger Band for different tool, or depending on what I'm trying to do. If they decide to bring it at the edge of the Bollinger Band 32, you will be in the region of 1425. Okay, 1425 up to 1440. Okay, these are the level at the edge of the Bollinger Band. So we are watching, which means we are day trading, following the price. If the price is about to, we are more bearish towards the market right now because we want to sell, but we are following the price. That's why we are day trading, following the price until we receive a clear-cut swing trading to the downside, because you need to respect the resistance level when the price is going up. Do not disregard that. This is about the S&P 500 index, okay, which represent the general market, okay. Now, so we are paying attention to the edge of the Bollinger Band, the 75%, 76%, 78% Fibonacci retracement level, which is this zone. This is on the monthly chart. I'll go quickly to my normal monthly chart, which is 20 days monthly chart, which I like to use. This is what we see here on the 20 days. The price is at a resistance level on my 20 days, where I will draw a line there for you so you can see clearly what I'm talking about on my 20 days. That's where it is, this resistance level where I'm moving my cursor. That's where the S&P 500 on my 20 days has touched right here, because sometimes on the 20 days things become very clear on the chart, and you can see clearly that the price will respect it. Okay, so we are watching this. This is a very important level. It's not the best time to swing trade, but to day trading, following the price carefully, that you do not try to go ahead, okay, of the price. You want the price to go show you the direction before you follow the price, okay. But there is also Bollinger Band here. That's where the best place for a professional to trade. This is on the monthly chart, 20-day monthly chart. This is regarding the S&P 500. We are cautiously bearish towards the indices, so we are day trading, okay. The Nikkei 225, which is the Japanese index, is highly bullish right now, so there is a high probability also that the USD yen continue the movement to the upside. The USD yen going up, the market must retrace to the downside. But what is happening now, we see that the USD yen start going up a little bit, the market also going up in the same direction. We are paying attention to the next non-farm payroll information beginning of March to confirm whether we should be completely bullish towards this market. That remains to be seen. Beginning of the March, first week of March, paying attention to the non-farm payroll. We will watch carefully whether the condition in the United States has improved or not. I will quickly show you the next chart is the Dow Jones, my favorite index, lovely Dow Jones. Again, I'm looking here. First, I will show you the normal monthly chart that many traders are looking at. This is the monthly chart. Drawing again on this chart, the Dow Jones, my favorite index, the wonderful Dow Jones. I'll quickly draw on this chart. Excellent index, controlled by the professional traders. Okay. Okay, this is my Fibonacci tools I draw. The Dow Jones has touched exactly the 75% Fibonacci retracement level in the region of I will show you clearly on this chart. That's regarding the Dow Jones. Also in the region, this has closed at 12273 according to my chart here, unless the information I have here is completely wrong, so you may rectify that yourself. Okay, the level is 12295. That's the 75% in the zone of 12295. The 76% is 12377, and the 78% is 1250. 1250 is a higher probability for the market to find a resistance there. 1250. So this is a resistance zone. This is an excellent time for day trading, following the price, okay, instead of swing trading. But the decision is perfectly yours. This video is for educational purposes only. As always, the smart money like to sell at the edge of the Bollinger Band, which means they may perfectly continue to bring the price up to the region of 12972. Maximum 13260, okay, 12993 up to 13260, okay. To be honest, we are more bearish than bullish towards this market because we are expecting the market to pull back down. But as always, that's why we are approaching this zone, which are Fibonacci zones, okay, very important zone, key levels. We will be day trading following the price itself, the number one indicator, because we are in the resistance zone. We will quickly go to the 20 days chart, which we prefer to use. This is our 20 days. The price has broken this resistance zone clearly, as you can see, and continue the movement to the upside. Okay, there is another level here where the price is approaching exactly in the region of 12500. Okay, 12500 will be the next challenge. That's the better resistance level you must watch out for. 12500 for the Dow Jones. Very, very important level for Dow Jones. Okay, again, we are day trading for the price. As always, the smart money may decide to bring the price at the edge of the Bollinger Band in the region of 13008 up to the region of 13307. Okay, so watch out for the edge of the Bollinger Band, which means a signal to sell. Now the smart money asking the next question: where is the best place to sell? They will sell at the best place. Okay, that's why you must be day trading, following them carefully. Okay, in order to participate in the direction of the market. When the Dow Jones reached this level of 61.8, we were telling you to look for opportunity to sell and for day trading. Okay, now the Dow Jones has broken the 61.8. NASDAQ is now reached, which is the 75%, approaching the 78% zone in the region of 12496. We are watching Dow Jones in this zone carefully. Okay, so you must keep your eyes wide open. Next week will be very interesting watching this Dow Jones. We'll see whether the smart money will decide to sell at the edge of the Bollinger Band, or they may decide to sell at 76%, which is exactly the 12347. This zone is a hot spot trading zone. If you are a day trader, you must rejoice. Okay, looking at the next chart, also talking about technical analysis of the market, we'll look quickly at the NASDAQ. Okay, the NASDAQ is showing a different picture. Now, the NASDAQ is very, very bullish because of Apple and Google, okay? But because Google is right now very bullish, okay? But Apple is showing some weaknesses, but I will show you in another video regarding Apple stock. But there is a room for Apple to continue the movement to the outside. As it has broken a major channel, okay? I will show you that in another video. So this is the NASDAQ index, okay? Now this is the tech sector we are looking at here. The prior had displayed an inverted head and shoulder, okay? Now this inverted head and shoulder, in my view, is in the wrong place, because normally the inverted head and shoulder is happening in a downtrend. So you have a downtrend first, and then you have an inverted head and shoulder. Now this is just an inverted head and shoulder out of nowhere, okay? Out of nowhere. After uptrend, then we have inverted head and shoulder here. So pay attention to this level. We can perfectly call this like a round bottoms here, but it's quite bullish right now because the price has broken this resistance level. What I'll do, I'll draw horizontal line there for you. The price has clearly broken this resistance level and has found a support after this monthly candle here. This is a new month that has begun. The next question is that, is the smart money want to sell at the edge of the Bollinger Band, which is right here in the region of 2500. Sometimes one index can be ahead of other indices, or the market is waiting for a change. So we know that the S&P 500 still got room to reach the 78% level, which means this NASDAQ will continue movement to the upside. That remains to be seen. But right now everything looks perfectly bullish for the NASDAQ stock. As you can see, the price going up. We will continue to day trade instead of swing trading, following the price carefully, because we have noticed that the Nikkei 225 is showing excellent bullish sign, which means people should be looking for opportunity to buy the Japanese stock, okay? So we are cautiously bearish towards all the other major indices. So we are only day trading. Watch it carefully. The market may completely disregard our intention to sell and continue the movement to the upside, but we are not prepared to swing trade to the upside. We will continue to day trade following the price, okay, in this particular scenario. So we have looked now that the S&P 500 is approaching a major level, the Dow Jones is approaching a major level, the S&P, the NASDAQ has broken a major resistance level, which is perfectly bullish. We will continue to day trade, watching the price. We know that the Nikkei 225, which is the index representing the Japanese 225 stock, is perfectly bullish right now. We are looking for opportunity to buy swing trade in the Japanese stock, and cautiously bearish towards the Americans and the European stock. There is another index that I'm not going to show you, but I will talk about it. Is the French stock, the CAC 40. The CAC 40 is showing a bullish strength, which is a bit strange because normally it should follow also the other indices. The FTSE 100 is approaching also the 76% Fibonacci retracement zone on the monthly chart, but the French, the CAC 40 also is is showing a bullish sign. Okay, this video is not about a trading signal, it's a trading discussion. We use the TSDWSY S08 as 008, but we do not give the TSDWSY S08 signal when we are doing our video. Our video are trading discussion, very important. So right now we know that the CAC 40 is showing a bullish signs. Okay, the Nikkei 225 is showing a bullish sign. The DAX 30, which is represented the German 30 major stock, is also at the 76% Fibonacci retracement zone. Same scenario, day trading, waiting for the market to show us a clear-cut direction. This is a technical analysis of the market, looking at the major indices in order to cream the market consistently. We are the TSTWSYS 008. I hope you enjoyed this video that you put into practice in order to enjoy your trade. Thank you for watching, and speak to you soon.